Welcome everyone. This is the third module on the problems of rural credit market. In this particular module, we shall focus on the reasons behind the dominance of interlinked transactions in the rural credit market. Then we shall try to find out what are the possible alternative credit extension policies in the rural credit market. As we all know, a common feature of the rural credit markets is the prevalence of interlinked market. Landlords are often the principal sources of credit to their tenants. The traders are often principal sources of credit to the owner cultivators. This naturally raises a question. Why is interlinked transaction so prominent? Now, what actually happens in the rural credit market is that the interlinked transaction creates a marriage of convenience which carries out credit and other dealings under a single umbrella. Landlords who provide credit to the tenants often find it easier to enforce the contract in case of non-repayment in a variety of ways, including the threat of removal from the land. The trader who transport rice of a rice growing farmer has the benefit of arriving fast in the owner cultivator's field owing to the superior information. This reduces the risk of voluntary default. However, all these are possible only if it satisfies a sufficient condition. What is that condition? The condition is borrowers and lenders should be engaged in either similar or complementary occupations. Now, given this idea, let us now focus on certain reasons that gives us an idea for the prominence of such interlinked transactions. The first reason is hidden interest. Interlinked transactions are often found to emerge due to certain hidden interests. For example, in Islamic society, usury is regarded as immoral and hence is banned under Shariat law. Under this situation, interest is collected in certain secondary forms. For example, there are usufructuary mortgages, that is, the mortgages in which the mortgager delivers the possession of the mortgaged property to the mortgagee and authorizes her to retain such possession until the loan is repaid. The mortgagee receives in this situation the rents and profits accruing from the property. Secondly, large landowner lending money may ask for borrower's output as long as the loan is not repaid. Thirdly, traders may make no interest cash advances to the suppliers provided that the supplier agrees to sell the crop at a discount. The second reason is related to interlinkage and information. Interlinked markets can reduce a part of the cost of the lender in keeping track of the activities of the borrower. For example, a trader who makes funds available to the owner cultivator might arrive at the field of the supplier at the harvest time to pick up the crop owing to her superior information. The cost of supervision of a tenant working in the estate of a large landowner is less. The moneylender has a chance to deduct the wages in case of loan payment of loans. Interlinkage also helps in enforcement of contracts. As we all know that the enforcement regime in the rural market is quite poor, and therefore a borrower taking money from the moneylender has the chance of making willful default. This problem can be solved in the interlinked market. How? For example, in case of a borrower working on the land of a big farmer and moneylender, there is an interlinked threat in the form of removal from tenancy if loan is not paid. The permanent labor is also forced to provide adequate effort if she is provided with the threat of eviction if the level of output is lower than some predefined minimum. Interlinkage also helps in creation of efficient surplus. It does so by preventing the distortions that lower the total amount of surplus. For example, consider the case of Lekhi, a rural laborer who wants to feed her family throughout the year. The problem faced by Lekhi is that the job in the rural labor market is only available in the peak season. No job is available in the slack season. Let us suppose that W represents the wage given to the laborers in the peak season. Let us also consider Bikash, a large farmer. Bikash hires harvesting labor during peak season. At the same time, Bikash also has the access to funds at a cost of I per unit. Now, Bikash has the option to interlink the credit contract with the labor contract. How can it be done? Bikash does so by offering a loan to Lekhi at an interest rate I star and offer a wage W star at which Lekhi will pledge to supply the labor in return of the loan. To make the things realistic, let us suppose I star to be greater than I, the market rate of interest, and W star to be less than W, the market wage. Now in this situation, suppose W represents the market wage in this figure, which is earned only in the season of peak consumption. Now as Bikash takes loan at rate of interest I, his consumption possibility locus during the peak and slack consumption season is represented by the line L into 1 plus I. Lekhi takes the loan at rate of interest I star. So for the loan, the consumption possibility locus is represented by the line L into 1 plus I star. For the wage W star, the consumption possibility locus becomes the negatively sloped straight line starting from W star. Now in this situation, the total return to Bikash is AC. Of this total return, the part AB represents the interest return, that is the return earned due to the charging of higher interest rate. On the other hand, the return BC represents the employment return. Let us now assume that Lekhi prefers consuming in both peak and slack season. So Lekhi's indifference curve will look like the usual indifference curves. Now if we consider the budget constraint of Lekhi as the straight line passing through point W star, then we find that Lekhi maximizes her utility at point C. Therefore, the total surplus earned by Bikash is the amount AC. However, given the indifference curve, there is a chance of Bikash of obtaining higher amount of surplus. How can Bikash do so? Bikash can do so by changing the pledged wage from W star to W hat. In this situation, the effective budget constraint will be shown by the red straight line and the equilibrium will be at C hat. So, the surplus earned by Bikash will be A hat C hat, which is greater than AC. So, in this situation, Bikash is being able to create higher amount of surplus. So, these are the 4 reasons which lead to the dominance of interlinked transactions in the rural credit market. Having said this, let us now move to our next issue. We all know that the need for rural credit cannot be adequately served by large financial institutions like commercial banks. So the question that naturally arises is that what are the alternatives? We can think of 2 alternatives. First, we recognize the fact that the informal lenders are more better placed than the formal lenders in extending credit to the rural borrowers. So what we can do is we can extend credit to the informal lenders. The second policy prescription can be to design credit institutions at the micro level that can take advantage of local information and generate innovative methods of better deployment of credit. Example of such credit institutions can be microfinance organization. Now let us look at the first alternative in a bit detail. We all know that large landowners are considered to be more creditworthy than the small landowners owing to their higher level of collateral. Now in this situation, the commercial banks can create a vertical formal-informal link by providing higher amount of funds to the large landowners. The large landowners can then expand their lending to the informal sector with their superior information framework. Now, what will be its advantages? We can at least think about 2 of the advantages. First, higher amount of credit in this situation will be allocated to the informal sector. Secondly, expansion of formal sector credit to the large landowners will increase competition between them. This can reduce the effective rate of interest charged by the money lenders in the informal credit market. However, in this regard, we should also take care of certain disadvantages. Firstly, increase in the total amount lent to the banks can increase the cost of monitoring. The cost of monitoring can increase due to the increase in the cost of administering a loan, clearing credit histories, and then tracking the loan to make sure that it is repaid. Secondly, there can be high chance that instead of heightened competition, the lenders may engage in collusive transactions. They implicitly agree not to invade in each other's territory, thereby giving them local monopolies. Thirdly, problem can arise when informal lenders may have differential information regarding borrowers. For example, suppose there are two lenders A and B. Lender A has high capability to distinguish between good and bad borrowers. In this situation, lender A essentially contaminates the pool of lender B by siphoning off good borrowers. Now, when A faces credit constraint, she might not siphon off all good borrowers. However, with the expansion of formal credit to the informal sector, A's supply of credit increases. So this will enable her to siphon off even more good borrowers. In such a way, increase in A's activities may be more than offset by the shutdown in B's lending activities. Now let us look at the second alternative, that is the creation of micro-level financial institutions. Now, this will be done with the target of organizing institutional lending facilities that mimic and exploit some of the features of informal lending. As I have told earlier, example of such is creation of microfinance institutions. To talk about microfinance institution, let us start with the case of Grameen Bank of Bangladesh, the pioneering microfinance institution. Started in the mid-1980s by Muhammad Yunus, following the failure of subsidized rural credit schemes of the government banks, the Grameen Bank operates in the following way. It targets very poor households. It lends to a group of borrowers rather than individual. Typically, a group consists of 5 individuals. In the event of default by a single member, no member is allowed to borrow again. The average loan size of the bank is around $100. No collateral is required to get the loan. And lastly, the nominal rate of interest is around 20%. The major feature of the bank is that the average repayment rates are over 97%. Why is the repayment rate so high? The reason for such high repayment rate lies in the process of lending. Here, lending is done to a group of borrowers rather than individuals. And in the event of default by a single member, no member is allowed to borrow again. This leads to a selection process which is known as positive assortive matching. In this process, good risk borrowers identify other good risk borrowers to form a group together, and thereby risky borrowers are effectively driven out from the market. However, there is also a problem in group lending. If a loan is given to more than one of the members, and in this situation, one of the members default, due to genuine financial difficulties, then the dominant strategy of other members will be to default willingly. At the same time, the peer monitoring effects might backfire as well, as the excessive pressure of choosing overly safe borrowers may not be a social optimum outcome. Following the success of Bangladesh Grameen Bank, microfinance organizations have flourished in various countries of Latin America, Africa, and Asia. Now, in the Indian context, if we look at the operation of the microfinance organizations, what we find is that in the initial phase, the microfinance organizations engaged themselves in poverty lending approach. Their focus was on ensuring the flow of microcredit facilities to the poor for the generation of gainful livelihood opportunities. However, over time, their focus has shifted to financial sustainability. This can be realized from the fact that a large proportion of microfinance services in India is concentrated in the south. Despite 4/5 of the country's poor residing in the rural areas, the rural share of client base now comprises only 38%. Now, this may have some adverse consequences. Now, with this discussion, let us now summarize what we have learned so far. The first thing that we have learned is that due to a number of reasons, interlinked credit transactions has been a dominant feature of the rural credit market. Secondly, given the problems of the formal credit institutions, there is a need to, number one, generate vertical formal-informal link by extending formal credit to the informal sector, and secondly, expansion of microcredit institutions. This is what we have in this module. Thanks for watching.